All right, let's move on to the next session. Now, Velling, thank you very much indeed for your thoughts. A privilege talking with you today. By the way, thank you for your questions. Do keep them coming in, the questions. Really is excellent to get those to the panel. And there's some provocative ones in there as well, which I'm very happy about. The second panel session of the day, which they're setting up for now, is entitled Disrupting Financial Services Through Technology and Innovation. What is actually happening here? How much of a threat really are the fintechs? Is the disruption more of an opportunity than a challenge? And can anyone stop the big tech juggernaut? These are some of the questions that we will hopefully have answered now. We are still setting up, but let me bring the guests up here anyway. I want to move this along. Please welcome His Excellency Mubarak Rashid Al-Mansoori, Governor of the Central Bank of the UAE. Please come on up. Mr. Adel Al-Mahmeed, Vice Chairman and CEO of Boubyan Bank. Good to see you again. Mr. Otto Williams, Vice President, Head of Strategic Partnerships. Hello. Fintechs and Ventures, CEMEA for Visa. And finally, Ms. Anwaar Al-Mahmeed, co-founder at Eastchain Company. Come on up, Anwaar. Eastchain is an investment firm focused, I think I'm right in saying, on blockchain and cryptocurrencies. Welcome to all of you. Please take a seat. Right, we've just heard from Mr. Velling, and I've got to say the context sounded pretty grim to me, I've got to say. We've got plenty to talk about here on disruptive innovation. Let me come to the Central Bank of the UAE first. Do transformative, disruptive technologies worry you more than they excite you, do you think?
Thank you very much. First, I'd like to thank Central Bank of Kuwait for hosting us for this great conference. And it's really important, these forums, for all of us as central bankers to come and face the private sector and the banks and see how things are evolving. When it comes to UAE, I think UAE has been at the forefront in terms of fintech and startups. So basically, in the UAE, I think we have about our share of startups and fintech is about 29%. I think we have about 30 startups on a yearly basis, I think followed by Egypt. So we are fairly there. And the beauty of UAE is that we have local governments and we have onshore and offshore. So there is a lot of dynamics going on. And as you might all know, we are an open economy. We are consider ourselves as a trade and financial hub, so we have to act that way. When it comes to us as a regulator, we are excited actually about the new solutions, the new technologies that are coming on stream, because they eventually, hopefully, will help us as regulators. And you'll ask, how?
Yeah. Yes, I ask how.
Okay. Let me tell you now, I think in the morning session and as well as in your previous session, there was a talk about catering to people in a more responsive way. And there was the case of China where they have a lot of people, so you cannot do it face to face.
Right.
So I think technology will help all of us deliver what we want in a more efficient. But I'm hoping that also these forums will help us as regulators to get to grips with how we will regulate. And because this is the issue for us is we are, I would tend to agree, we are reactive.
Yeah.
To what's happening in the sector. And it's very difficult to teach a regulator technology.
Yep.
But it should be the other way around, where you bring technology-savvy people and teach them regulation.
Because that's a bit of an excuse, isn't it? It's hard to teach a regulator technology.
But it's a reality.
Yeah.
It's a reality.
But it needs to change.
But unfortunately, the technology people, they don't want to work for the central banks. They want to work for the technology companies.
Yeah. Yeah.
So there is a challenge in itself.
All right. Let me move it on to you, sir, Boubyan. We've just heard that the central bank is open to feedback and maybe criticism is the wrong word from the private sector, but
we don't criticize.
No, but I don't want to make this too provocative. We've got to keep this extremely diplomatic, but do feel free to speak your mind. How disruptive do you consider your bank? Is it given the space and as much freedom as it needs to do what it wants to do in this space?
I consider our bank is like the most disruptive in the last 10 years. And it was not by choice or design, it's by necessity. We were like 10 years ago, we were the smallest bank in Kuwait. And if you are a small or maybe a new venture comes in, you have to be disruptive. If you're going to play the same game with the big guys, you cannot. So that was why we chose this line of business. Now for us, 10 years since we started, within the organization, the mindset and the DNA now is you have to disrupt the way you work in each of the segments within the bank. As a result, I'll give you one example of market share. When we came 10 years ago, when MBK bought Boubyan Bank, market share of Kuwaitis transferring salaries to Boubyan Bank was 1%. Today, after 10 years, it's 25%. So quarter of the market. It didn't come from only doing business as usual. It came because of the disruption. During these 10 years, and I saw what I heard and saw what the governor mentioned about the challenges, we work within these challenges. I have to remember them. I think he was talking about resilience, value, efficiency, talent, I don't know what's loyalty, I think, loyalty. We've seen loyalty increasing, and we are like, I will tell you that 50% of youth in the diploma and university are our customers, 50%. We've seen efficiency is not an issue that until now we could see within the organization. On the customer satisfaction, it was high, but we've never seen reduction in cost. Efficiency didn't work. Until now, the mindset of the people, and this will take time, for them to start converting this digital, this new business model to cut in cost of a transaction until now. I'll give you an example. We're doing the new head office. 4 years from now, we're going to start building. So we asked our staff, give us your manpower planning. The result, 30% increase in staff, which is different of what everybody's saying, that, okay, with digital, with automation, with all of this, and the way that business is going to change, staff will go down. We're going back and forth, and still, while our team thinks that we're going in this direction, but it's not being converted into efficiency. And this is the challenge, I think. I think it's going to take time as we go. The second one, just before, is the talent. The talent right now, we started our lab and innovation center and all, whatever you say, this digital. And we were looking right now for the last 2 years for staff or team. Now we are 100, and we're going to move to 200. But it reminds me of 10 years ago when we were the new risk function came in. There was no people in that expertise. So right now we're trying to look here and there and here and there. And now I think the jobs that I think the governor mentioned, now there is what they call it IoT, Internet of Things.
Yep.
Now this is like the
Yep.
new thing. If you want to be, and this is like for everybody, if anybody wants to have a career in banking now or in business, you have to have what they call Internet of Things. Anything relates to the internet.
Thank you very much indeed. Anwar, let me bring you in here. I'd like to know where the smart money's going now. In fact, let me rephrase it. Where's your money going? Where's Eastchain's money going? What excites you most?
Well, for us at Eastchain, we're focused on blockchain technology specifically. So our portfolio, we're excited about every investment in our portfolio, but our first and largest investment is in a company called Republic, which is actually present in the exhibit here. And essentially what Republic is an investment crowdfunding platform. So anyone from anywhere in the world can spend 2 minutes to open an account, invest as little as $10 through credit card, debit card, wire transfer into the equity of a startup. And this is going to transform funding in the future. I do believe it will be the primary form of funding for startups in the future, because imagine if we had that here in Kuwait or in our region, we could have us, the users of Talabat, of Carriage, the ones who order from Pick every day, the ones who use Kareem, could have invested very early on in a market that was very niche and kept for the elites of Silicon Valley. We could have been a part of that, and because we are the reason for, we the users are the reason for the success of these companies, once they're bought out, like Kareem, when it was bought out for $1 billion, we could have received part of that return. It's a growth hack, and it increases customer engagement and loyalty and a lot of things.
Anwar, have there been, and I might be completely wrong here, but have there been any real game-changing fintechs that have upset the balance of power between economies and central banks? Have we seen that yet?
There's game-changing, upsetting the balance of power. I think Libra is doing a good job with that. But I mean, for game-changing, you see the likes of...
It hasn't happened yet, of course.
Hasn't happened yet, but it's a process that will eventually happen, I believe, in the future. But the ones that we saw are game-changing are the likes of Square and Stripe, right? That created opportunities for the smaller businesses to have payment solutions. And they're really integrated. The fintech and the small businesses have to go hand in hand, because they will be the reason that small businesses can grow in such a competitive environment. So there's a lot of examples today.
Okay. Let me come on to Visa. 17,000 bank clients, I believe you have. We're talking, and some of these numbers are astounding. 65,000 transactions a second is what you process. When we talk about the regulatory environment and an enabling environment, to what extent does that environment dictate the business decisions you make?
Absolutely. Thank you, Axel. And I just want to thank the organizers as well for having us in this session and this panel. The fact of the matter is the Fintech Trend has been around for quite a while. And I think that's something we just need to step back and acknowledge. Boubyan, a gentleman mentioned earlier, been around for 10 years. That's how long fintechs have been around, over 10 years. Square launched in 2009. It's been 10 years since. And the challenge, what we're facing now is that the momentum has just built up. It's the question or the concern isn't, that this has started, is that it hasn't stopped. And so that's the question that everyone is faced with and they're trying to react to and address today. Momentum has continued. And in order to understand what's driving that momentum, we've got to ask what fuels it. There are three things that we absolutely have to acknowledge that fuel fintechs today. And one is consumer needs, plain and simple. It's democratizing investment, so it's not just the big institutional investors that can invest. It's allowing the consumer to be able to track their spend and be able to manage their budget and their goals a lot easier. It's removing friction from commerce so they can travel all over the world and manage 25 different currencies that Revolut allows them to do as they travel across borders. They're basic needs that consumers have always had but have never been addressed. Second is venture funding. Over $40 billion in venture investments in 2008 in fintechs alone. $40 billion in 1 year. Massive and significant. There's a lot of money flowing into the space, and it is fueling fintechs. That hasn't stopped, that has continued to accelerate. And the third, and I think most important point, and that goes to your question, is The regulator. A lot's changed, and that's what's fueling a lot of these changes. It's the regulator is mandating open banking. The regulator is opening up sandboxes. We see it in the UAE, ADGM. Fintech Hive, we're invested in the Dubai Fintech Hive as well. And opening up sandboxes, allowing fintechs to come, play, experiment, discover consumer needs in their markets so they can better write regulation and be less reactive and be a little more proactive about that. We're seeing that happen. Regulators introducing digital KYC, and that's transformed a lot of things because it allows you to onboard consumers a lot quicker without having to put in place massive operational paper infrastructure, and then you can learn behaviors and engage consumers more.
Are these changes happening quickly enough for you? What more can the regulator do for you right now?
Absolutely. And so what more the regulator can do is continue to digitize. This is important. Continue the digitization and cashless drive. It's more digital KYC, it's more sandbox enablement, and it's also just enabling a cashless ecosystem. The regulator has to embrace standards. Standards are key. You know, I give an example of Bharat QR in India, where Visa contributed its M-Visa standard, and that QR code, and that became the EMV standard, because no one wants to see a merchant display 7 different proprietary QR codes to be able to accept payments. And that also allows consumers in any country, from Kuwait, from the UAE, to travel to any other market and be able to engage in commerce because there's a standard payment framework. It allows fintechs who have launched in one country to launch in your country as well.
Your Excellency.
Actually, it's not only regulators who have to really play their role. It's also other government agencies, because if you think for this to succeed, you need to have your digital identity, you need to have your eKYC for you really to open a bank account, whether for individuals or for companies, in a matter of seconds. Now, I'm sure this varies between our countries, but it takes days, if not a month, to open a bank account for SMEs. And by the way, these technologies will be very helpful for SMEs, and this is where our countries have a focus. Private sector, SMEs, to enable them to flourish. And the technologies mentioned about providing credit, this is already happening, and this is happening providing credit to SMEs. But the issue, we see it from a regulator point of view, if this sector becomes meaningful, is how to really, for financial stability and consumer protection, what are the ingredients for us as a regulator to embed in these new mechanisms so that we are comfortable not having the face-to-face feel of that person.
But you say if this becomes meaningful, it's already meaningful, right? I mean, those working in the sector, in the space, would say to you, this has been meaningful for many, many years. And maybe it's that mentality that needs to change a little bit. Is that fair to say?
At least in our countries, I think crowdfunding is still nascent. It's not meaningful, but it's gaining momentum. But again, it depends on the regulators. If we will allow this, we already have a regulation is out for consultation to see the feedback from the sector. But we are concerned about consumer protection, because people put their money. Of course, these are small ticket items, but this is how it starts. Starts as small ticket and then it grows.
By the way, there has been a Slido poll that I think you've seen it up on the screens. They'll hopefully put it back up on my screen so I can look at it again. Do have a go at that, and I'll bring you the result to that at the end of the session. Here you go. In the future, what role will fintech and big tech firms play in the industry? And there are your pieces there. We heard Noud Velling talk about what's happening in China and the extent to which the big banks, the ICBCs, for example, have moved quite far. how hopeful are you that this integration of big bank, of the incumbents and fintech will continue and is on the right path now? Yeah, to you, sir.
First, I would just, one point. 2 years ago, if you asked me about fintech, I think in one of the conferences here, I said,
Yeah. I think I did ask you about it, yeah.
One of my fear was fintech. Now, I think we realized after 2 years that we can cooperate with fintech.
Yeah.
Before they were coming for retail, single payment system. But right now, I think both realize that both needs each other. Even if you look at internationally, even the evaluation of new fintechs is going down.
So you don't see it as a threat anymore?
It is a threat as a single transactions or single payment system. But for us and for them, we have to cooperate. The fear is the big companies, the Facebook and the Apples. The smaller guys now, they know, and I think from research shows, now it used to be 30% wants to cooperate. Right now, the latest research that I was reading, 60 to 70% of the new fintechs, while they are applying their concept, they're looking at cooperating with banks because they need volumes. The evaluation of now of IPOs right now, looking at fintechs, they're looking at not proof of concept, whether it's a viable business. So they need, before they go, they have to have a partner. And the partner has to be a big bank that gives them business for them to prove the idea is viable for them to grow it or to bring investors.
Anwaar, when you make decisions, and based on what we've just heard from Boubyan, when you make decisions, how big a part of your decision-making process is also down to this idea that the fintech you like and that you're interested in is able to and wants to work with one of the big incumbents?
So what's more important to us is their regulatory positioning, because in VC investing, you're exposed to multiple layers of risk, the risk of investing in a startup, for us in a nascent and new technology or industry, but the regulatory risk is what makes it or breaks it for us. And it's very hard to mitigate that risk, but what we can do is make sure that the companies we invest in know where they stand and what to expect. And in order for them to do that, they have to have an open and active dialogue with the regulators in their jurisdiction, stay up to date with global developments, but more importantly, anticipate and build businesses that can support future regulation. And in order for them to do that, they need some form of clarity. And this is where it gets tricky, and this is where the regulator's job is tough. And I do not envy them, but they've done it before. And it's about striking that balance between over-regulation and stifling innovation, or under-regulating and possibly discouraging the entrepreneur from even venturing into that, or allowing bad actors to get involved.
Yeah, but we've been asking that question, or putting that out there for many years now. In your opinion, has this discussion moved on at all?
Yeah, I mean, it's evident by this conference right now. I mean, we have a central bank governor who organized this fantastic conference to tell everyone, the banks and everyone involved, that change is happening, let us be the innovators. He clearly supports the youth by my presence here on stage with such esteemed panelists. And that's integral to the advancement of any society, right? We have Sheikh Nasser Sabah Al-Ahmed with this grand vision for the future of Kuwait, which is a brand new platform for us to innovate on, and we're lucky in that sense, and we should be contributing to it, developing towards it. Same with the ministers of finance and trade. All of them have been very supportive of innovation and youth. And more important than that, you have the entrepreneurs in our region that are burning with a desire to actually start building global brands and global businesses. Yeah. And this is the time for the governments around the world to actually compete for these businesses, like we're seeing with Switzerland and Singapore, who have been very progressive in this sense, and even the UAE.
Your Excellency, go ahead.
Actually, it's happening. I mean, it's, if you look now, I was looking at certain numbers before I came here. $1.3 trillion of daily transactions across 90 countries by 800 million. Maybe this number changed by now. So fintech is happening, and if you look at within the fintech technology, the adoption of artificial intelligence and machine learning is the highest in 3 main sectors: automotive, technology itself, and financial services. So this is already happening, and I guess some of our banks, they are already gearing up for the battle. And they are collaborating with fintech companies. You will see a lot of banks now, they are going digital because they know the threat is coming. When you look at companies like Facebook, I agree with the ex-governor that Facebook has a lot of issues in terms of AML, CFT, and you can see, but they are counting on the cross-border. If you have a Facebook account, you can transact, go anywhere, and use your account. Unfortunately, this is the issue now, the boundaries. We are good within our own space, but cross-border is a challenge. However, we have a solution. We have, as the governor in the morning mentioned, we have the GCC RTGS.
Yeah.
That's happening.
Yeah.
And then we have Dr. Abdul Al-Mahmeed here from the Arab Monetary Fund. He's spearheading the Arab payment system or company, which is across the Arab world. I think there is a great potential for the cross-border, at least in our region. The more we do cross-country, cross-region, the less we will need the Facebook in the future.
Have we had an official statement from the central banks in this region on Facebook and Libra yet? Has there been that? I don't know if there's been anything from the region. I'm not asking you for it. I just wonder if we've had it.
No. I did not make any comment,
okay.
But okay. I share Dr. Willing in terms of the concerns that he had.
Yeah. Okay.
In terms of email, CFT, and.
I'd like to speak to you, Otto, about cybercrime. You're well positioned to see what's going on here. Innovation is clearly key, from what I've heard, in fighting cybercrime. Is it moving fast enough? That sort of innovation to tackle that issue?
It could move fast. It could move faster. And we're doing a lot in this space. And I just want to say this. I think for the banks in the room and the regulators, we're always in conversation with them across 200 countries. With the banks and bringing fintechs together, Visa has always viewed itself as a collaboration network. 17,000 banks and expanding to include non-banks and fintechs as well. And what we've been doing with banks is bringing them into co-creation with fintechs to drive innovation. And so what is the consumer journey experience in your market or in the segment that you want to pursue? How can a fintech be part of that story to help you accelerate and go to market fast? And how do we achieve that go-to-market strategy? And so we do that with the banks. And then we take it the next level further. We engage fintechs to bring additional capabilities to the network and drive scale. And so in addition to obviously digitizing our own platforms, and I think as the governor mentioned, we've exposed APIs so banks can consume and fintechs can consume, but we've also acquired fintechs and invested in them to bring their capabilities to the network so banks can consume as well. And so when we invested in Verify to drive chargebacks and representments, because family-friendly fraud is a big issue for banks and for a lot of players, we acquired that asset. We acquired Rambus to tokenize credentials, which helps to address cybersecurity, because what we want to do there is devalue sensitive financial data. Yeah. We have acquired additional assets to drive that, to address the cybersecurity issue, both around tokenization, around EMV chip and contactless, which has dynamic cryptographic data, and also around 3D Secure for e-commerce transaction payments.
You know, we very quickly, we always, I find this fascinating, but we always talk about the bad actors being 2 or 3 steps ahead of us, always. Right. Is there anything that you see that will narrow that gap, or does that gap always stay that gap and that big?
Well, I think there are a number of things that can narrow that gap. One being, you know, some of the assets that I've just mentioned earlier. So that's at an ecosystem level. Whether it's 3D Secure, it's tokenization, or it's, you know, point-to-point encryption on transactions. The other is at the transaction level. I mean, being in 200 countries and seeing 65,000 transactions per second means we see a ton of data. What that allows us to do is apply our AI and machine learning platform and tools to decision in real time. And so we can actually see these transactions, score them in real time, and decision, so the banks can make a decision, merchants can make a decision, and the consumer can be alerted on that transaction, all happening in real time across 200 countries.
Yeah. I want to talk about AI, and I'd like to get...
Can I speak thing?
You want to speak to something else first? Yeah, and then we'll move on to AI. Please, go ahead.
If the banks are going to compete, they have to compete the way they manage their own business. They have to have it, they will manage like maybe Anwaar manages her small company. And in the bank that we are doing right now, we have things that we abide by it, which we're saying how to approach all these technologies. The mandate for the management is that we will have to compete. So we have to upgrade our game. We will cooperate in case we couldn't. And we will co-invest. So co-invest, we will invest.
Yeah.
We will invest with them, compete, cooperate, invest. These are the things. The other thing that I tell at least my team is that there is something in Boubyan called no. There is no for a new idea. If you think about it, let's do it. Because we are a small bank, and maybe I'm sure we don't have like legacy. The big banks, I know, I came from a big bank, where like taking or making a mistake is hard. So these are the two things that I think the way we should manage. I'll give you an example. The governor maybe or the central bank knows about it. Two years ago, we were saying, let's do a wallet. Everybody's jumping in wallets. You just open any literature, the wallet is the future. So we jumped. And it took us a while to take approval with central bank, how does it work, and others. And we were in the final stage. In the meanwhile, all the players are into wallet. So what we hear from the market, all the banks are into wallet, all the operators are into wallet. So we looked at ourselves and said, okay, we're going to have a wallet, or we're having a wallet. How is going to make money? How is going to make sense for us? And then we said, okay, who will participate with us, with our market share? So I called my friend here, Adel, who is like deputy chairman of Zain, and I said, Banasir, we're having a wallet. He says, I have a wallet. I said, okay, what shall we do? And then we met the next day, and we shook hands, and now, for us, which is a little bit hard, but this is how agility, and this is how, like, if you want to be a disturbing or disrupting organization,
yep.
I dumped my wallet, and now I'm joining forces with Zain.
Right.
He has the wallet. He has 3 million customers. I have 600. So we're now having a wallet for 4 million.
Just very quickly before I move it on, what do you, when I mentioned this morning Apple Card and made by Apple, of course I've given the name away now, I tried to protect that this morning, made by Apple, not a bank. When you see advertising like that, what do you think about that?
I'll tell you, when I do research, and in our bank we do a lot of research, the number one request by our customers is Apple Pay. Tell them we have app, I said, okay, when is Apple Pay coming? We're going to then tell them all these bells and whistles that we think that is innovation. When is Apple Pay is coming? So this is how risky and how dangerous for us it's going to be.
Yeah.
All your information on the mobile, now with Apple Pay, put on Apple Pay a credit card. Now a credit card right now is going to be mostly, you can use a credit card as a bank. Either you keep credit or Apple will start lending there. So if with credit card, and if the credit card is within an Apple customer, it's a bank.
Yeah.
In reality, it's a bank.
Okay.
Banks have to look long term.
Yeah.
Don't look short term. Don't develop your own wallet.
Yes.
You have to really come up with a collective.
Yeah.
In UAE, we asked the banks to come up with one wallet. So we have 16 banks now having one wallet. So going forward, you have to be careful. You have to be looking long term. Loyalty that was mentioned in the morning will continue so long you provide value add. and cost-effective solutions.
Actually, an interesting question comes from the audience on collaboration. And I will come to AI and I will come to you, Anwar. But I'd be interested to get your view on this. What about a collaboration between the banks and telecoms companies? Given the immense data, this is the question that the telecom companies have, and the infrastructure of the banks, is that a good marriage? Is that how would you view something like that?
We have issued our stored value regulation in 2017. And we have made a space for telecom companies to come and play in this space for the unbanked population. Because maintaining a bank account is expensive, for people who are, $200, $300 salary a month. So we have issued a license for telecom companies to offer services for the unbanked. So there is a room for collaboration.
Yeah.
We're going to be experimenting this
through a bank.
Through a bank.
Yes.
Yeah.
They have to put the money in a bank.
Yeah. Okay, on to AI, and there's a few other fascinating questions coming from our audience. But AI, clearly an increasing role. Clearly, it's something that you're going to be excited about. That everyone's going to be excited about. What about the ethical controls? And the ethical controls and the ethical limitations, and the idea of this idea of privacy and data privacy, etc., that has blown up so much recently.
Well, I'm not an expert in AI, but I can say this. So AI has 3 levels, and what we see with Siri and Alexa, that's narrow AI. What people are working towards right now is general AI, where they're as capable as a human being across the board, and then there's super intelligent artificial intelligence. That's in the future. And that's irrelevant to this. In terms of the ethical aspect of it, it will be difficult, but the regulator cannot regulate technology. They can regulate the businesses that use the technology, right? They can regulate the markets. They can be as they were just mentioning, the banks can be the aggregators, the people who provide the infrastructure to these startups. Artificial intelligence will take a bigger role in the future, but it's something that will happen slowly, and this is where the regulators need to focus on, right? It's the ethical aspect is we're becoming a global society, so ethics need to be considered in a global sense now, not in a cultural sense. So a lot of things will be changing. The next 20 years will be completely different from what we're used to, I believe.
What are you investing in now that is working in this space?
No, we're not focused on artificial intelligence. We're just blockchain. But blockchain will secure the data that artificial intelligence retracts from, right? Because you want the integrity of the data. You want the data not to be immutable. You want the data not to be tampered with. And this is where blockchain can fit into AI and enhance the effect of AI, rather than just let centralized companies like Facebook and Apple develop these artificial technologies.
All right. We're slowly coming to the end of this session, but there are plenty of other questions coming in. Let me ask you this one, and I'm jumping around a little bit, my apologies, but do you think there's a danger, coming back to the central premise of this discussion, of having 2 worlds? Those people who have access to fintech and use that, and those who do not. And what sort of problems could that create, and how do we deal with that? Anyone? Yeah.
But that's not possible anymore. I mean, people not having access. I think we have seen in Africa, we have seen in India what they have done. I mean, financial inclusion increased from 20% to 80% because they registered all Indians. They had their national ID number, and they can transact. They can open an account online. And people, I mean, it's simple steps. I mean, you look at your mobile now, it was designed for, the kids could navigate through. So I think people, out of necessity, they will learn, they will use. So it is our responsibility. This actually puts a lot of responsibility on the regulators to make sure data is protected, to make sure that all regulations come to par with the new technologies. And I think this is the challenge we're having, is looking ahead as regulators and coming up with new regulations to regulate this sector. Another area I forgot to mention is the trade finance.
Of course. Yep.
This is really going to change the whole sector by using DLT, and banks will have more confidence in lending credit because now you have authentic, you have credible source of information.
Mr. Al-Mahmeed? Yeah.
We always say about millennials, I think, and they have, I don't think now it's within technology of banking, I don't think I agree with His Excellency that using financial transaction, financial information is not only for millennials now. And we see the presentation of our governor. I don't think the governor was, when he was presenting, he's not a millennial. Hopefully, hopefully he is, but he isn't from age. For us right now, when we're using technology right now, I'm 60 years old. I use technology, so I don't think when we talk always about millennials, I think in other things, but within financial text, I think everybody in the world right now will be using these technology that fintech or banks or otherwise will be using right now. So it's not, the millennial, I don't think it's related to the financial, because even if you are 60, 70 years old, you still need convenience to transact within your mobile.
Yeah, all right. Look, we are quickly running out of time. Sorry, did you want to? Yep, go ahead, Otto.
Can I just very quickly add to that? So the fintech phenomenon is an outcome of enabling infrastructure. It's cheaper cloud storage, it's bandwidth, it's consumer connectivity, it's the smartphone, it's digital identity that regulators and governments enable, it's digital KYC, and it's just a perfect storm coming together. And as banks become part of this conversation, part of the enabling infrastructure where they expose digital assets and capabilities for third parties to consume, I think it starts to complete that equation. That's what we're doing actively as Visa as well. So to answer, as part of your answer to part of your question, which is, will there be environments where, two worlds? Not if there is such enabling infrastructure. And I think that's what we all need to collaborate effectively to create in our markets, is that infrastructure to solve consumer needs that have been around and will continue to be around.
Okay, good. Yeah, go ahead.
And also, just to mention, fintech is all about financial inclusion, so it would close the gap between those two worlds. That's what they're aiming to do, these startups, is to include those 2 billion people who don't have bank accounts.
Yeah.
They will be entered into this financial system, so it won't really be two worlds. It'll be more like one.
Okay. Look, let's put the voting up on the screen because it's closed now. And part of me is trying to work out whether I should be surprised by this, and I'd be very interested just to hear from each of you if you're surprised by these results. Okay, the question was, in the future, what role will fintech and big tech firms play in the financial services industry? A leading role as the primary provider, 27%. A prominent role in competition with the banks, 32%. A prominent role in collaboration, in competition was before, in collaboration with traditional banks is the winner at 38, and a secondary or niche role at 3%. Does it surprise you, anyone, that this prominent role in competition with traditional banks and a leading role is lower and not higher than we've got? Does it surprise anyone?
It's not surprising because if you look at the fintechs, they start small, so I don't think they will be able to compete with the bigger institutions. Maybe if they collaborate with banks and become bigger, they will change their strategy then.
I think it's anybody's guess.
Okay.
All these, we don't know. 2-3 years down the road,
Yep.
maybe one will be 90% and money will disappear. So it's like now, I think I would be guessing, and I think, with all my respect to my colleagues here, everybody's guessing. That's why it's 30-30. It's not a clear.
Right.
Everybody thinks it's going to go somewhere.
Okay.
It doesn't surprise me. Banks still have trust. Banks have consumer trust. That's significant today, and it's an important asset. And fintechs are very niche focused. They launch with a niche solution in a niche segment before they begin to expand.
I think it's up to the banks whether they want to support these fintech companies and adopt them and integrate them into their businesses, or let them try and compete alone. And there will be those that can compete, like the ones I mentioned, Stripe, which is recently valued at $35 billion. So it depends on how the banks want to tackle this.
Your Excellency, final question.
Just finally, because we did not touch a lot or focused on the cybersecurity, I think cybersecurity is tremendously important and will be a catalyst for going digital, and will be a driver for people to go from the traditional banking to the digital. Because now they try it for the sake of trying, and maybe they put a little bit of money there, but the moment they have confidence and credibility in these solutions, you will see a big movement. So my message to all of our banks is really shape up or shape out.
Right. Okay,
Thank
and
you.
we will leave it there. Look, thank you very much indeed. We covered a lot of ground here, so I appreciate your comments and your candor as well from all of you. A big round of applause, please, for our panelists. Thanks very much. Thank you. Thank you so much. Thank you. Thanks, Otto. Thanks, Anwaar.